Good morning, everybody. Welcome to the Flow Show. A big week awaits. Lots of central banks, lots of data, lots of everything going on. Again, we haven't stopped since we came back from the old summer lull. So it's going to be busy this month, and busy it is, and going to continue this week as well. Morning, Kay. How's your weekend?
Morning, Ryan. Morning, everybody. Yeah, not too bad. Bit windy. Yeah, the biggest test week ever awaits once more.
Yeah, very much so. They're always big. But that's good volatility for us, hopefully. So plenty to trade this week. So let's get cracking straight into it. Lots to get through this morning. Going to start with a bit of data out of China. And things not looking as good. I mean, these are all positive numbers, but they came in lower or worse than expectations. Industrial production coming in year on year 5.2%. One of their capex investment metrics also coming in lower, 0.5%. But as I say, still positive numbers year to date. IP coming in at 6.2, retail sales year on year missing expectations coming in at 3.4%. The unemployment rate ticking up to 5.3% there. So as I say, yeah, data coming in softer than expected, but obviously China will want that growing more than expected. The National Bureau of Statistics says they expect the economy to continue to grow stably. They say the external environment is very severe. Uncertainties are rising, and some firms are facing operational difficulties. They're going to came out with the usual waffle. They're going to support businesses and expansion and blah 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 blah. No talk from these guys about potential future easing measures, though that's still on the cards and being talked about more and more by the rest of the market. Over to the ECB bods, and ECB's Nagel says more rates could threaten price stability. More rate cuts could threaten price stability. Says there's no pressure to act for any further interest rate cuts. ECB's Casimir says it's a mistake to neglect the upside inflation risk, showing his true hawkish self. Says we remain in a good place. He brought rates into neutral territory, and vigilance is essential despite the progress we've made on inflation. But says there's no need to act on any tiny deviations from target. Let's go into last week's data. There's still not a lot coming out this morning in Europe particularly, so we'll go straight back into yesterday's stuff. There wasn't a lot on Friday either. The market having a little bit of a afternoon off, though we did get the Michigan numbers, which went further backwards. Consumer sentiment falling to 55.4. We're expected to come in roughly unchanged. Current conditions moved back as well. On the inflation front, 1 year inflation came in unchanged at 4.8%, 5 year at 3.9%, went up from the 3.5% previously. So this Michigan number, we've seen similar in the conference board stuff. We had been coming in negative, then we saw a couple of jumps, and now we're back to unwinding all that again. So consumer sentiment softening a bit and inflation expectations rising a bit as well. Deutsche Bank on their Fed thoughts. They see a 25 pip cut coming now in September, October and December meetings, where they had only previously forecast 2 cuts for September and December. Trump says the Fed chair is incompetent and is hurting the housing market. And speaking about who's potentially in line to replace Powell, says, I have 3 people I like a lot. Also says he expects a big cut from the Fed. So you can imagine what the news is going to be if they only cut 25 on Wednesday. There's been a lot of air miles being clocked up over the weekend. We've had US bods travelling to the UK and elsewhere, meeting with China, meeting the UK. What happened into the weekend was that the US Treasury convened an emergency G7 finance leaders meeting to talk about Russia and the pressure to get this war ended in Ukraine. The US stating that EU allies need to impose meaningful tariffs on goods from China and India to stop the purchase of Russian oil, which will all be rescinded if the war ends. Fat chance of that happening, but that's what he's going for. Anyway, and also just to keep you in the loop, we are facing the prospect of yet another US shutdown. Trump commenting on that as well, says we have to get Republican votes to avert a shutdown, and will likely do a stopgap. That's all coming to a head as well, end of the month. So that's more risk for the market to take care of, but likelihood is that we do get another can kick probably into maybe January, February next year. Kay, not a lot out. I don't know if you've got any other stuff from the weekend or other bits and bobs.
Oof, no, we had a couple of a French downgrade and then two upgrades. Spain and Portugal. Fitch downgraded France a notch, which was, let's say, widely expected that it would happen sooner or later. Portugal got upgraded by a notch by the same ones, and then S&P upgraded Spain. We know that Spain has been an outperformer in the Eurozone for quite a while now. So S&P likes it. So yeah, that was a bit of extra news on Friday night. For the rest, I haven't seen really much shocking coming out over the weekend or on Friday. Yeah, it's more like what is going to happen this week. We also have Trump coming over, visiting the UK royals in Chateau Windsor, and probably meeting with Starmer over there as well.
Yeah, so Starmer getting his tongue nice and polished. I'll leave that there. I'll let you imagine the picture from that point. Yeah, he'll be doing a lot of sucking up, no doubt. Yeah, so we've got plenty going on this week, so let's have a look at that. We've got tons of data. We've got central banks galore. It's all going off. Right, so what have we got mainly on data front? Well, we got the start of the new manufacturing month today in the US. Empire State kicks off later on, so we'll have a look at that, see if there's been any improvement in that sector. The FOMC start their meeting tomorrow. Well, also today, I think at some point we should have the rubber stamp of Miran happening to join the Fed, and then he'll be in place for Wednesday. Without going too much into the FOMC, do you think that's going to have an impact on market, that confirmation, Kay?
No, I think, well, you know what? The non-confirmation will probably have a bigger impact if he doesn't get it, but it should be confirmed. I mean, all of that is expected. Perhaps the market actually even trading small bits and pieces of it because it's going to add a vote for a cut. But so I would say, yeah, I mean, not getting him into the seat would be a bigger surprise at this stage.
Yeah, and I'm just looking because we also got this Lisa Cook stuff going on. And there was supposed to be some sort of rush through the courts. And I'm just trying to see what happened with that because I forgot to look at that this morning. I don't know what passed on that. Yeah, I'll have to dig in because that could have some ramifications if she's booted off ahead of, the announcement Wednesday or when the meeting starts tomorrow. Obviously, that's going to be one voice less in there, one dissenter away from Trump gone. But if he confirms that he's got the power to fire people, it's gonna change the game for how people view the Fed.
Yeah. It's more the idea of will he get the power to fire people, and that would be that would be really badly taken by markets, I think.
Yeah, so keep an eye on that one. I'm not sure what the timeline is for that going on. But anyway, back to the calendar. So the Fed begins tomorrow and announce on Wednesday. We also get UK jobs tomorrow. which could have some significance because we've got the BOE on Thursday too. So keep an eye on that as well. We've got the German zoo survey. We'll see if the Germans are feeling a little bit chipper. They had the marginal boost over all that infrastructure spending and stuff earlier in the year, and that lasted the best part of a month before it all went backwards again. We get Canadian CPI, again, pertinent data ahead of the Bank of Canada on Wednesday. Then we get US retail sales, and we get some pricing data and industrial production, and we start getting some housing stuff as well. Again, all this is before the Fed, so retail sales could be something that maybe pushes the Fed a little bit more dovish or less dovish in what they give us on Wednesday. So that's going to have some impact on last minute rate expectation trading. Wednesday, big one for the UK, CPI data, PPI data. No expectations really for the Bank of England to do anything. But if we do get a really bad jobs number and we get far softer inflation, again, the market is going to have a little bit of a last minute expectation change in trading for the BOE, but they are largely expected to stay on hold. US starts and permits come just ahead of the BOC meeting. They're also expected to cut by 25 pips too. They've seen their jobs market going a little bit sour and inflation coming back down again. Then it's all about the Fed later on and whether they surprise with a 50, stick to a 25, and then what they're going to be doing moving forward. Thursday, some numbers for Australia, jobs data. Then it's the Bank of England. Where are we? September, so no press conference from that. It will just be the announcement and lines. So we're saved from having to listen to Bailey for an hour and a bit. Philly Fed manufacturing. We'll just add or subtract to the Empire numbers that we got today. And then on Friday, we get CPI from Japan and the BOJ and UK retail sales, which coming after the Bank of England will just sort of add or take away from any message there. We also get public sector finances, which again, the market will look at as to how crap those might be, and Canadian retail sales as well to finish off Friday. We've also got the Norges in the middle as well. They are on, check your notes, I think they're on
Thursday
as well, before the Bank of England. Now, that one I wanted to speak to you, Kay, because Mark is expecting a 25 pip cut.
Yeah.
But I read up on the last Norges meeting, and they stayed unchanged because of sticky inflation and the jobs market holding up. They did see a little wobble in the jobs market, but that's reversed and inflation has gone up. But the market's expecting a cut. I think this one might be a bit more of a close one than the market thinks.
Yeah, I think it may be a closer one indeed. Okay, they kind of prepared the market for a potential cut, and I've put it on my update as well. So it could be that they just put their money where their mouth is. But yeah, as you say, we had the inflation actually tick up slightly. We've had the unemployment rate doing pretty well. The only one that's not great, although it's okay, GDP. So in the data, in fact, there is not a lot that would push them to go for a rate cut. Now, usually when they hint at one, they follow up with it. But it is going to be, yeah, well, 60-40, 55-45 decision to be made. The interesting one there is that we have seen the Norwegian kroner already strengthen. We've also had Norway, as I was putting on my morning update, is likely going to be the beneficiary if Europe continues to phase out Russia's supply on energy. And there's quite a bit going for the Norwegian kroner right now. also the fact that their government can continue has brought more stability. So that means not a big overhaul of the oil fund. There's a lot going for the Norwegian kroner, and also let's assume for a minute that they hold and they find themselves still at 4.25%. That makes them in the G11 space. A pretty high yielder, and okay, roughly around where the Bank of England will be, and where the Fed will probably be as well at the top end of the Fed funds. But still, I mean, it's not a bad currency to have, really.
Yeah, no, it's not. You're quite right, and it's certainly looking like it might be coming down, or that pair might be coming down anyway. The
Yeah.
knock pairs. But yeah, so what do you reckon the trade is on the announcement? Then do you reckon
I
if we get a rally in this on an unchanged number?
mm, I get I've already been, and I'm still a bit short dollar Norway because of my dollar bias. But I think Euro Norway may be a pretty decent alternative. But I'd love to perhaps ahead of the news or something, or ahead of the if we could get back up to just 1165 or so, may already be a decent area to give it a thought, to try and sell a few there as well. Um, So yeah, I think Norwegian kroner will continue to do well right now. In amongst its peers, G11, we also saw well, Noki Stocky, the Swedish kroner is a different animal, but it's starting to tick up again. So it's one of those, when you look at Norwegian strength, it's also nice to have a look at Noki Stoki. It's a bit like your Aussie Kiwi in that
Yeah,
part of the world, and it is picking up a little bit. So it's still amongst one of those that could do well. The Norwegian kroner is still part of them, in my opinion.
yeah. Just trying to find one that hasn't got full of silly
Yeah,
spikes
all
and moves
those.
and
Yeah,
that.
I know, but I mean, I know, there's a lot of
Noise.
noise on some of those charts. There's a
Yeah.
lot of noise on those charts. Uh,
Well, those lot need to get their act
no,
together.
okay, but
Anyway.
no, but you get the thought process, right?
Yeah,
Same
yeah,
as I prefer to have Aussie dollar compared to Kiwi dollar in position right now. If the way is to buy or to sell dollars or so, it's a bit the same with the Norwegian kroner and the Swedish kroner right now. So of the two, I think Norway could continue to do better, and just for all the reasons that I've mentioned, um, and which is. Quite atypical, because if you would say, but there is no real risk of trading right now. But if you look at risks in geopolitics, etc., Norwegian kroner, Swedish kroner may not be currencies that you want to own. But it's been an atypical market right now. I'm not really trading on the back of risk.
yeah. Good stuff, mate. Right. So what else we got coming up? So we'll just running over. Oh, let's get on the right one. Just running over the central banks briefly. So we're expecting the BSE to cut 25, the Fed to cut 25, Norges potentially to cut 25, BOE unchanged, BOJ unchanged on Friday as well. I think for the BOJ, we got to maybe expect a couple of sources pieces. The one we got the other week was from Bloomberg. As far as I know, we haven't had any directly from Japan, which are probably a bit more reliable. So keep an eye on that. It's not so much whether they go at this meeting; it's what these sources might suggest for the rest of the year, and whether we're going to get a hike before year end. So that's what we need to look at for that. Do you reckon the CPI data is going to swing anything, Kay, on Friday?
No, which ones? The
The Japan.
Japanese?
Yeah.
It's after the meeting, huh? Oh, I really I don't know, because the last prints, they've been a bit wobbly here and there, bit of a high one, then a low one. Could do, but no, actually they come just a couple of hours before the
Yeah.
announcement. Right. No, I don't think it will change their decision right now. It's hard to see them move just out of traditionally if they're still seeking that new leadership for the LDP. So why as a central bank would you move right now? It would be a real surprise, even if the CPI ticks up a little bit. Would be an absolute real surprise if they move. But if CPI ticks up, they could send us to the next meeting in when is it in
October,
end
I
of
think, isn't it?
October, yeah, end
Yeah.
of October, and then it could be bingo.
Yeah, that's quite possibly it. October will be a good one to pull one at. Right, so that's what's coming up. So anything else you got your eye on this week, mate?
No, I think that's enough. That's enough for 1 week.
Yeah, there's bound to be more. There's going to be more.
Oh yeah,
Um,
all the truth socials, etc.
yeah. Right, I'm keeping an eye on cable at the moment because we are doing a lot of knocking around this 136 level today. We've had several goes up here. I have seen a 136 print, so that is a fresh high for what's been going on for several months. This level was being really solid. I've actually just dropped some buy stops in this morning because of the price action here. I'm just contemplating whether to take a little early punt long just below the figure. I might do so if I see a little dip to 75 or something, 70s. But this one looks intent on breaking high, K.
Yeah,
Will it have the legs to kick on from that, or are we just going to get a little flash and then back in the box?
yeah. I've only seen it trade on the retail platforms. I'm not sure whether Reuters traded 136 cable.
Bloomies as a double O print.
Yeah, but
Whether that was just a high tick or not, I don't
just
know.
the double O is usually not enough to say a barrier is gone.
Yeah,
I think they changed the rules. Well, they have changed the rules over time from three touches to regular trading, and then even trading through before they can call the barrier done. But no, it's looking very big.
yeah,
It is looking very big. I wouldn't be surprised to see a 136.5 print before we go into the central bank meetings, FOMC and the Bank of England. It is really big. Yeah.
yeah. I mean, it looks like perfect barrier action, but it would be a very short-term barrier if there was one there, because it would have come pretty quickly in after July, and you don't
Yeah.
tend to
Still,
see them that big when they're that short-term.
well,
Um,
still. I mean, still, even if you go back end of July, the first high print there at 135.90 or so. Yeah, no, end of July. Yeah. Pop. Just the first one of the last series yeah,
yeah,
there. 24th of July. You put a two months, 3 months barrier in play. Why not? Some do it. And again, we think too much about barriers in the speculative way, but it may just be a barrier for a big contract or so, huh? And there will still be defense on. It depends how large it is, but it looks to me we are going to go through. Just depends how big the barrier is, whether it goes fast or just a slow move through. But it all looks pretty big, that stuff. And there is the potential of announcing this nuclear plant deal and other deals between the UK and the US. Maybe it has a bit to do with those things. I was half joking about Trump's visit, but we know that whenever Trump and his half of his administration are visiting a country, there's usually stuff being signed. So I think that has to do with what's happening in Sterling right now.
yeah, absolutely. I think we've also got a bit of going to see a bit of a speed thing happening if cable does go through that 136. We could see euro sterling coming down and testing these low 86s again if that's a pretty big break and euro dollar isn't following as fast. So I've been playing this range a little bit while keeping along. If I do see that sort of move, I think I'm going to have a little nibble, add back to my longs. down as low as I can get them, because I think if excuse me, if we do hit this 86 level, oh excuse me, frog in the throat. Yeah, if we do hit this 86 level, it's going to be a bit of a speed move rather than a fundamental move, and so that sort of decent level might put the brakes on a cable rally, or at least cause euro dollar to do a bit of catching up. So yeah, I'll be looking at that one as well as seeing where this cable break goes.
I tend to agree on euro sterling. I've been trying in the middle of the range, and I've just let it go for now. But if we get down to 86, I'm going to probably buy it again. Perhaps more for the medium term also.
Yeah, I've been trying to work my way out the middly bits and try and stick to the lower bits of the range.
It has it starts to have euro Swiss allures.
Yeah, exactly.
And Dimi speaking about sterling Swiss. You know, sterling Swiss, Dimi, I completely agree. I completely agree because it's also very good on the on the funding side of things. You can keep long sterling Swiss and providing sterling isn't losing, of course, more rapidly. But you wouldn't do it from a cross kind of perspective because um, uh, uh, and it's going to have to be with a stronger Swiss franc, stronger sterling, because the Swiss is really treading water. I mean, it's such a miserable currency again. But from the funding side of things, if you want to steer away from stuff like yen, for instance, but yeah, from a funding and fundamentals as well, Dimitris. But I mean, we have seen Swiss has really not reacted much to fundamentals. But I think from a carry point of view as well, you're getting a little bit of money to be in sterling Swiss. It's not a bad idea if you want to play it that way.
Yeah, I mean, but this one is a completely opposite picture to cable at the moment. And if you look at what's happening there versus what's happening in pound Swiss, yeah, I don't know if that one would be. Yeah, you can earn some money on it, but I don't know if it's quite the trending one that cable is
Nah,
at the moment.
it's that bloody bloody Swiss franc.
Yeah, you might be better off in Guppy even.
Yeah,
You know,
yeah. Especially if we get kind of confirmation that Takaichi is going to be running ahead of everybody in those polls in Japan. I haven't seen one yet, but maybe they are just not all confirmed yet. All those who want to run.
yeah, because I bet you that pound Swiss will go down faster than the others if the pound starts dropping. Yeah, not on my play card anyway. Right, what else do we say? I'm going to look at a couple more, then I'll pass it over to Kate nice and early if I can find where I'm going. Aussie Kiwi, as I've been highlighting, we're up against a big old level here, 1170s, 80s. This is a level that's been tried and tested going back years, and we're up knocking again on this level. This might be a last line in the sand. Well, for me and my shorts, I'll have an assessment if we break here in 112. I've been building shorts and jobbing it around from the sort of 110.60s up to round about here. I did a little short this morning. So, this looks very strong. I'm firmly aware that I'm pissing into a very strong wind trading against this one. But, it's done it before. The amount of times we've seen these strong moves that have hit these levels and held. So that's if you're going to trade the techs, you've got to trade somewhere, and this is where I'm trading it. But if we do bust here in 112, I might reassess, get out, and then maybe look to see if we go and test the bigger, wider range, which will be, as I say, from 112s, 113s, maybe even up towards that fib at 114 and a half. So certainly got some wind behind it, this one. Okay, what would turn something around like this? I mean, the Aussie's like the darling at the moment, and there's no stopping it. But things always look most bid at the top.
No, and well, I've been saying I still like the Aussie as well. Because sorry, the data weren't too bad, and the also Australia has been left comparably to other countries pretty how shall I say not a lot of aim
Unscathed.
was sorry.
Unscathed.
Yeah, unscathed. Not a lot of aim was taken at Australia by the US on the tariff side as well. What could turn it around? Uh, I've
Do you
read
think? Do
that
you think if Trump puts a bigger?
one of the big Australian funds is planning to invest like up to $1 trillion Aussie or so over the next, but it's over the next 5-6 years or so outside. So maybe that is going to cause foreign currency buying. But in the meantime, as well, it does again show at the healthy nature of Australian investment funds, etc. as well. So I don't know. I mean, something positive in the Kiwi that all of a sudden causes a big catch up of the Kiwi dollar, and that could turn around the Aussie Kiwi, at least temporarily. That could be the case. So I'd rather say that if something needs to turn the Aussie Kiwi around, it's going to have to be the Kiwi in this case.
Yeah, yeah. I was thinking maybe if Trump tries to draw the Aussies in to all this sanctions stuff on China and India,
Yeah,
that might drag
maybe.
them in. But then if Aussie goes, New Zealand will probably be dragged in as well. So that might be a bit of a zero-sum game. But we know China likes to hit Australia harder, or seems to pick on Australia when this sort of stuff happens. You know, they start moaning about wine and cattle and all the rest of it. Yeah, I'm beginning to sound more like a bit of a hope for my shorts than anything else, but
Yeah.
you've got to look at
The,
both sides.
the other reason why Aussie is beat right now is that Australia is also a non-negligible gold producer, and gold is absolutely
Yeah.
ripping, and that is another thing that is supporting one of the pieces of the puzzle why Aussie is also remaining supported right now.
And also high rates. Another one with high rates. So that's it. That's in the picture too. Right, I'm going to punch it over to you, mate, for a few. All yours.
Let's just not spend too much time on the euro dollar. It is beat. I mean, we have seen basically the dollar being a bit under the cosh this morning. We've seen cable rallying, as Ryan already showed. We've seen, whoops. What are you doing there, Ryan? We're getting a lot of noise here.
Oh, sorry, mate. I was just moving something across my desk.
Uh, yeah, I think, yeah, he's eating crisps, Ali. Yeah, so we saw the dollar being sold this morning. I think it's just the market preparing what's to come, expected rate cut in the US, etc. So the euro dollar is obviously pushing a little bit higher. Also, yeah, we've got this balanced thing about France getting downgraded and then Portugal and Spain upgraded. So I guess the players in the market have just now seen the balance of the things, and the balance is relatively neutral. So the euro is pushing up, but we are still well inside those ranges. Okay, we are going to need to break 117.80 to push through, and then starting to dream about much higher levels. Maybe into that 120. We do have data out this week as well, as Ryan already mentioned. Um, it could push if we get a bit of divergence between what's happening in Europe and what's happening in the US on the data ahead of the FOMC. But will we have the strength to break above this one here? I doubt it before the Fed, unless, as I said, something really drives the dollar down further. In which case, all the currencies will probably push higher against the dollar. But watch 117.80. If we would get yet another failure over there, we're still watching the same levels, 116.60, 116.70 here on the downside. That's your range really to start the week. As Ali was saying, Ali, you're a bit long cable. Well, it has to break here, right? And even looking more left, we had already those levels, but there we pushed through and then failed, and in the meantime we are already gone a lot higher. So I but if we start to break, and now we have seen with the price action this morning, we have seen that it's really 136 the figure. If the figure goes, I guess we are going to trade into the 136 and a half, 136 three quarters, to and then reassess perhaps as well. Let me quickly look. We do have employment report tomorrow in the UK, so that may be, if it's not too bad, giving us an extra push before we go into the FOMC and then the Bank of England, obviously. Failures, yeah, we know where we stopped in this 135.20, 135.25 is the first one. But I would rather say that the market is going to look at this level here. If we would get a bit of a reversal in the dollar, of what we've seen early in the week, 134.90-ish. Okay, that's going to be a more important level, I think, to start the week. I really want to show you this dollar Norway because it's important. Okay, it's important. We've seen this whole decline here, from in 2020 down to into 2021. We have been breaking up under those fib levels from that move, but more importantly, we are now on the whole bounce here, and maybe I have taken out the top, so I'm really going to adjust it. We are smack bang on to the 50% of that move. Okay. Um, and I think Norwegian kroner is still, as I said, a decent currency to own. Yeah, we may have a little bit of a yo-yo ongoing ahead of the central banks or so. Um, Looking beyond the FOMC and Norges Bank, assuming that we get the 25 from the FOMC, and then what the, let's say, majority of the market expects in the Norwegian kroner, it's going a cut. It's going to be very important to see where we end the week or after that Thursday. Um, if we get a cut in the of the Norges banks, it's 10.05. It's relatively simple. You can add that 10.14, which was a really decent support on the shorter time frames before we broke down, but already 10.05. That I think is really now needs to cap. That is what I'm really looking at. For when the week advances, I'm as I said, I'm a bit short. I think we may go for a break. Do I want to add? Maybe not especially right now, but it is, we are on a relatively important zone, and I've been already saying if we manage to continue to slide, it's going to be probably 967. But even here, we could imagine ending the week somewhere around this 945 level as well, in my opinion. Okay, because this is looking like Norwegian kroner, and Norwegian kroner, as we were already discussing, has quite a bit going for it right now. Same on the Aussie, although the Aussie and the Kiwi both now are slowing down. This Aussie here, there is this trend line from all the way from 2021, and we are again hesitating on it. Okay, so this is going to be relatively important for the continuity of this move higher. Okay, we know that it's held in the on the shorter time frames, that 66, 20, 30 again. Actually, this morning's low was around 30 actually, and so that's going to be your first little level right up there. I'm on the daily, right? Because I want to show this trend line. If we continue to slip and slide in the dollar, this is probably going to look at around 67 and a quarter, which is going to be your next level of resistance. We can see that here. This is the 78.6 of this move, and there's a bit more going on there around that 67 and a quarter. And we will also have that trend line coming in around there by the time we get there, I think. So this is on the Aussie. In the meantime, as I said, 66, 20, 30, 15 maybe. It should be your first support, but it's a level until it breaks, right? So we do have to respect it. Okay. So this 66, 60, 65-ish. Okay. Um, Moving over to what I usually do, gold. I don't think there's a lot to say about gold. I think, yeah, spikes, etc. But we are correcting a bit flat for the time being, as you can see, making up the mind. I'm going to say maybe this is just waiting in the wings until the FOMC is over. Of course, if the FOMC would decide to cut a 50, this is probably going to shoot through straight away. But um, where all the other reasons for it to remain bid, we've been talking about geopolitics, we've been talking about uh, market participants being a little bit worried about will this unemployment thing continue in the States? But if it does continue, it's also going to go higher. So I mean the other basic reasons for it to continue to go higher are still very valid, but we may need to work of a bit of positioning, I think, as well, because it's got such a big rally. I wouldn't be surprised if we continue to hop around here until FOMC, basically. If we would get corrections, okay, 35.90, 35, 36, the figure, it's going to be your first level. Stretch it maybe to 35.80 here, prior high and the last low before we pushed on. If we start to break above 36 three quarters, then I guess we are going to look at the next extension level, which is around 37, 35. But for the time being, I'm going to say that we range trade a little bit more. Okay. Silver, on the other hand, is still extremely big, extremely big. This thing is has moved above the channel, moved above the long term, and this is a really long term 78.6 is all the way from 2011 down to 2020. The 78.6 was around 41, call it 50, 60. And we are above and we're holding above. So it's still extremely big, that one. So we also broken above the channel. It's a bit close for comfort, I think, and because that channel now comes in at 42, um, which in silver is really no distance. We are trading at 42.20. I would really say 41, 50, 60, and then um, remember I told you we were all already holding on this really fragile trend line at the beginning, but really the buyer stepped in every time we got close to it. So it means that they were not satisfied yet. I think to know whether the real buyers are still going to be there, I think we should probably allow for 41, 50, 60, and then start again. If they're already here around 42, I don't know what's going to stop it before 42.85-ish or even 43 three quarters, you know. If they already buy along this line, there's not really a lot that we can do. I'm certainly not standing in front of it. I am thinking though that on the next big level higher, I may be tempted to take more of my leftovers of my long term really ultra long term longs. Dollar cat. I don't know. I really don't know. We have seen every time we have seen, if you zoom out a little bit, first attempt, then a second attempt higher here, which is a bit of a top end trend line. But 139 everywhere, anywhere 139, just above 139 looks to be a bit toppy, but now we are trading back lower. Yeah, 138 and a quarter is a bit of a support level. We are trading on it. Um, Bank of Canada is going to cut right this week, so I still would not. Maybe it's just coming down in sympathy with the other dollars, but I would think that dollar CAD as such is going to find probably more rapid support than other dollars, and I'm thinking about maybe, but this is really short term, right? Maybe around those low 138s here, or 137.90. 137.90 may be attainable, but I'm not a big fan of Canadian dollar right now. I mean, I'm not a big fan of buying it right now. I know that Ryan have been trading that for much more than I have done of late. So I don't know. What's your sentiment on the Canadian dollar right now, Ryan?
I think it still looks fairly constructive above 138, but it
Okay.
can't get and hold above that 38, 60, 70 level. Just can't hold for any length of time
Hmm.
up there. Yeah,
Okay.
right in there.
So what is it then? Range between 137.90, 138.10, and then 138.5, 60, 70?
Yeah, yeah. And if it goes above that, if it starts to hold above that 38, 60, 70, then it should have a crack at the 139s and that prior high. But otherwise, yeah, it's in the box.
The thing is, I'm not tempted to buy Canadian dollar because the Bank of Canada is
No.
probably going to cut, and their data have not been like extraordinary, right? So it's not
No, I mean,
the
I've
radar for
definitely
one.
got a dip in this one. If we got a
Sorry?
dip down to that 137, 25 or 2035 zone again,
Yeah,
yeah, that real solid double bottom that we saw, yeah, get another one down there. That I'll look to pick that up.
yeah, okay. Yeah. What if what if we get there? Because I mean this has been looking already a little bit here. Okay, we had
Yeah,
this spike down, but
yeah.
already 37.9.
We could do with both banks. Could drive it down there. Who
Yeah,
knows?
could be. All right. Yeah, of course. I mean, if the Fed goes much more dovish than what is overly expected right now, yeah, the dollar will get a slap around its neck. That's for sure. Back over to you, mate. I'm done for today.
Yeah, thank you very much, mate. Yeah, I'm done for today as well. So we've got you set up for the week ahead, so you know what's coming, how to trade through it, hopefully safely. Thanks for coming to the Flow Show, everybody. We'll see you nice and early tomorrow to see what's going on. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.